Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be seeing how you can use the Aroon indicator for mastering the market timing. So this specific article we have sourced from Money Control, but we'll also apply this indicator on Antweb's charts to show you how it directly applies and how you can use this in your charting strategy and trading strategy. Basically, and I will show you on the chart itself where the buy and the sell signals like give you some examples. So let's look at what is Aroon indicator first. So the article itself gives you some basics. That is, Aroon indicator is developed by Tushar Chand in 1995. So this is an indicator system that determines whether a stock is trending or not and how strong the stock is. So we have some origin of the indicator's name. So Aroon indicator is similar to other momentum indicators in terms of being used to time the market entry into a trend. So it becomes most effective when confirming signals or conditions identified by additional technical analysis. So when you're using Aroon indicator, it's best to have some more technical indicators on the chart. So like it Aroon indicator is most effective when confirming. So have an indicator applied on the chart and then use the Aroon indicator to confirm the specific trend. So you have a extra verification. So as we can see, this is the illustration, the first example that has been given. So as we can see, this is an example of the Nifty daily chart, and this is the Aroon indicator. So when you apply it on the chart, the Aroon indicator will appear in the bottom to give you an idea of like the Aroon up and the Aroon down. So we'll look into that. Okay, first further. So the construction of the Aroon indicator. So here is the underlying formula for the construction. So Aroon indicator helps traders to make a prudent decision while trading complex scenarios. So Aroon indicators fluctuate between 0 to 100. So in this example here itself, we can see this is from 0 to 100. So the Aroon up is based on price highs while the Aroon down is based on price lows. The default parameter is considered as 25. So Aroon indicator is calculated using the following formula. So this is the formula for the Aroon indicator. You can know this formula if you want, but generally since you'll be applying it directly to the chart, you don't necessarily need to know. You just have to understand how it works. You can always check back the formula to get a better understanding so that you can create your own trading strategies based on it. So for some more example, let's apply it on the chart. So here we have, let's look at, in this example, they use the Nifty daily chart. So let's find the Nifty daily chart. So this is the Nifty daily chart. You can use the hourly or the minute wise options or the weekly or the monthly. But since the example said daily chart, we'll apply that here. Let's apply the indicators. First, we have the Aroon indicator. And it was mentioned here that the default parameter is 25, so we will also apply that. So in the settings option here for the indicator, we'll change the period to 25. Now that that is done, we can see the green line is Aroon up and the red line is Aroon down. Okay, so let's see some more explanation of this. So in simple language, the indicator consists of the Aroon up line, which measures the strength of the uptrend, and the Aroon down line, which measures the strength of the downtrend. So this green line is a measure of the strength of the uptrend. So since this is below 50 also, we can say the strength of the uptrend is very low. And since even the red Aroon down is also below here, we can say this is basically on a even scale and very shaky, volatile. Okay, so working of the Aroon, like most momentum oscillators, the Aroon appears on a chart in a separate window. As we have already seen, the Aroon up and Aroon down are complementary indicators that measure the elapsed time between new 25-day highs and lows. So this, since we have applied the 25 periods on the candlestick chart, So this shows the elapsed time between the 25 days highs and lows. So within the past 25 periods, the highs and the lows and the strength of the uptrend and the downtrend. So how does this work? So the Aroon is plotted against the middle line of 50 that differentiates the strength of the trend. So they are shown together so chartists can easily identify the stronger of the two and determine the trend bias. The Aroon up and the Aroon down lines fluctuate between 0 and 100, with values close to 100 indicating a strong trend and values near 0 indicating a weak trend. So as we can see here, this is both of them are below 50 and they're closer to 0 than they are closer to 100. So this is a weak trend. Both the uptrend and the downtrend are both weak in this situation. Okay, so the lower the Aroon up, the weaker the uptrend, as we have already seen, and the stronger the downtrend, and vice versa. Okay, so the main assumption underlying this indicator is that a stock's price will close regularly at new highs during an uptrend and regularly make new lows in a downtrend. So this is the main assumption when using this indicator, so that the stock's price will regularly make new highs in an uptrend and it will make new lows in a downtrend. So since we have the specific period also in the last 25 periods, the indicator focuses on the last 25 periods but is scaled to 0 to 100. Therefore, an Aroon up reading above 50 means that the price made a new high within the last 12.5 periods. A reading near 100 means a high was seen very recently. So as we have in this chart, since it's below 50, a high was not seen in the last 12.5 periods. Okay. A down reading near 100 means a low was seen very recently. So since the red line is Aroon down, if this was above 50, then that would mean that the uh, a downward peak or a low was seen in the last 12.5 periods. But since both of them are below 50, there was no specific highs or lows. Now let's see the trading technique. So usage of trend lines and moving average is the most effective way while in trading with Aroon indicator. So according to this, Aroon indicator is used with moving average. So moving average and Aroon together are used to develop a trading strategy. So here we have the example on this candlestick chart. They have the moving average line and the Aroon indicator. So this is a 20-day moving average line. So let's apply this on the chart. We'll go to the moving average option and apply it on the chart itself. Since this was a 20-day moving average, we will also apply that here. So field is closed, the type is simple. Okay. So this is the 20-day moving average, and as you can see, it's moving closely with the candlestick chart trend. So here in this example of the candlestick chart, which is given here, this is the low point, sell point. Here is the buy point. Here was again a buy signal, and here is sell signal. So let's understand this better. So how is the buy signal formed when you're using simple moving average and Aroon indicator together? So for the entry point, Aroon up is greater than the Aroon down, and the Aroon up is greater than 50, and the buy signal is generated after a close above the 20-day moving average. So this will be the 20-day moving average line. The closing price will be above the 20-day moving average line, which is here. And the Aroon up is greater than 50, and the Aroon up is greater than the Aroon down. That's why we have it here. This has crossed this specific chart here. It has crossed the 50 mark line and gone up and hit the upward trend, and it is also the closing price is above the 20-day moving average line. So both of them have aligned together. So here we have the buying entry price. So exit price. So The exit will be, one can use multiple ways to book profit and exit, like Arun up again near 100, or the price trend line breakdown, or a close below the 20-day simple moving average. So when it closes below the simple moving average, you can use this as a sell signal here. Now let's look at the sell signal. For the sell signal, here is the entry. No, first let's look at the this buy signal entry here. Let's look at it in the chart itself so we can get an idea. So the green line will be greater than the 50. So here we have the 50 mark, and the closing price is above the 20-day simple moving average. So here is the buy signal. Here is one specific buy signal at this point, and here is the sell signal because it's closing here. The chart is closing below the moving average line. So this is the exit. So here you can enter here where the Arun is hitting the peak at 100, and you can end here. This will give you a considerable profit. And let's look at one more signal. Let's look here. So here we have a peak, but this difference is not large enough. So this is slightly risky. It's better to avoid this. Let's go a little back. This is very close. So this shows that the Nifty 50 is specifically volatile, as it's difficult to show another example. So let's go into the sell signal. So let's look at the entry point for sell signal. The Arun down is greater than the Arun up. The Arun down is greater than 50, and the sell signal is generated after a close below the 20-day moving average, as indicated. And the exit will be, like, the Arun down will be again near the 100, or the simple price trend line breakdown, or a close above the 20-day simple moving average. So let's look at here. Let's look at the selling. So here is a selling point, sell signal. As you can see, this has the Arun down is at 100, and it is significant above the 50 level, as you can see. So this is a sell signal. You can sell here and exit. You can exit here when the red line is moving, or even when it's somewhere closer, when the trend shows that it's weakening up, or here when the specific price where the closing price is going to cross the moving average line. Let's look at one more. So here was one sell signal specifically. So this was the Arun down line is close to 100. So this is a sell signal, and here this can be like one, like, exit point, or here you can exit here because this has definitely crossed the 20-day moving average line. So you can see that this was considerable profit if you had shorted it, or like bought it here and sold a lot more, bought the stocks here. So let's look at the consolidation. When both indicators are below 50, or both are moving lower with parallel lines, it can signal that the price is consolidating. New highs or lows are not being created. So as we can see, the trend is very parallel and the highs and lows are not being created. So traders can watch for breakouts as well as the next Aroon crossover to signal which direction the price is going. For the 25-day Aroon, readings below 50 mean a 25-day high or low was not recorded in 13 or more days. as we can see, since both of these are parallel and below 50, and Arun down is also like close to zero, it shows that a 25-day high or a low was not recorded in the 13 or more days. Prices are clearly flat when not recording new highs or lows. Similarly, consolidation is usually forming when both Arun up and Arun down move lower in a parallel fashion. So this is price consolidation is happening here. And the distance between the two lines is quite small. So here specifically in this region, in the past we can see there was the price was very close and it's going Arun up and Arun down are traveling very parallelly. So this narrow parallel decline indicates that some sort of trading range is forming. So as we can see this even in the candlestick chart it's showing that this is like a trading range. It's not going above or below the trading range. So the first Arun indicator to break above 50 and hit 100 will trigger the next signal. So this is one signal here. This is like one small periods signal here. So here we also have an example using Reliance Industries. So let's apply these on Reliance Industries. We have the Arun. Let's also add the moving average. For one more example in an extra stock. This is 20. So as we can see here was a parallel. Here again there is a trading range in this specific area and trading range here. Right now it's in a sell signal. This the downward trend is at a peak, so it hit a low recently in the last 13 periods. So the interesting aspect of using the Arun indicator in day trading is that you can also use it during range bound markets. When the price of the security consolidates within a range, the Arun up and down lines will stay parallel to each other. So since the Arun up and down lines remain parallel, you know that you're in a range and trading is very volatile right now. So conclusion, chartists can use the Arun indicators to determine if a security is trending or trading and then use other indicators or technique to generate appropriate signals. So you can apply other indicators on top along with the Arun indicator to get like better signals and to confirm the trend specifically. So Arun indicators are different from typical momentum indicators which focus on price relative to time. A surge in Arun up combined with decline in Arun down signals the emergence of an uptrend. So let's see. A surge in the upward Arun up and a decline in the downward Arun down indicates an upward trend. So this specific upward trend here and here specifically. The Arun up is trending high and the Arun down is declining. So this shows a strong uptrend here as it has kept on hitting highs over and over again. So a surge in Arun down combined with a decline in Arun up signals the start of a downtrend. So let's look at that. So here, the Arun down is surging and the Arun up is declining. So this shows a strong downtrend. So the consolidation is present when both move lower in a parallel fashion or when both remain at low levels below 50. So right now, as we can see, the specific Nifty 50 is in a consolidation level. Here it used to be in a consolidation level, but it's going slightly parallelly. We should look at some more data to understand this better. So that's how you can use the Arun indicator for understanding the market timing to time your entry and your exit. So you can use this indicator in your daily chart or you can use this in an hourly or 30-minute chart based on your trading strategy and apply this to make better trading decisions. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to start trading in the stock market, you can create your Demat account with Alice Blue by clicking the link in the description and filling out your details. With Alice Blue's brokerage services, you'll get excellent exposures and margin for trading in the market.